All right, man. It's time to get into my favorite part. Enough of us just doing the intro. Enough of us just talking about the challenges and the rules. It's time to actually dive into it and get right into the actual strategy and get right into the game that I'm gonna teach y'all. I'm actually excited, bro, because like I know the impact it had on my life once I started like putting everything together. And then even now, like for the people that have no idea, like if this is your first time trading futures and you have no idea how futures are moving, after I get ready to show y'all how volatile these pairs are, y'all gonna be like, man, what have I been doing this entire time? And I'm excited for y'all to have that same reaction as I get ready to teach y'all one of my scalper strategies that I use on the day to day to pass challenges, and then also what I use on a personal account to have fun with too. So without further ado, let's get into it. All right, so these are the two main pairs that I focus on when I'm trading on Top Step X. So you have here the Nasdaq 100, aka the NQ, and then you have the YM, which is equivalent to the US 30, right? So these two for futures are considered minis. We kind of like, I like to call these like the big brother pairs because they also have like a micro version of these that are less volatile. So for example, I want to show y'all before I get into the strategy, like how volatile these pairs are. If I replay this chart back, and let's say I entered NQ right here, and I just placed a one contract. So that's AKA a one lot. I want you to think of it as a one lot. Now, how do I want to say that? You know what? I'm not even gonna say no. I ain't gonna say it too crazy how I want to say it. I was about to get complicated. I'm gonna keep it simple. So here, as you can see, this is a one contract. I'm not gonna drag this TP, but I want y'all to pay attention to how volatile this pair is. So just off of one contract, as you can see, two candlesticks, you're already floating $1,400 in profit, right? $2,500 in profit, 2,300 in profit, 34,000 off of one contract size. This is how volatile the NQ is. So for people that's not, if you like the volatility, great. Like this is my type of party. This is what I do, right? If you don't like the volatility, they do have a mini version of this, which is called, my fault, a micro version of this. Let me make sure I'm getting my technicals right. They have a micro version of this called the MNQ, which stands for micro Nasdaq. And this is for people that's like, you know what? My account size isn't that big. So if you're trading on a personal account, my account size isn't that big. Oh, I can't trade it, da 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 da. Or or if I'm not comfortable trading that much yet on Top Step with NQ, bet I just want to do MNQ. Cool. Let me show you that same how it differs with the one contract. So if I pop another one contract here on the MNQ and I let this play out. So remember that first candlestick was like $300. As you can see here, that's a big difference between volatility. So by now I would have been up 3,000, 2,500. As you can see, a one contract over here on the MNQ, all you're floating is $500. So this is more your speed. That is no problem at all. Like, don't feel discouraged. All you got to do is, because at least with the one contract here, you have more room to let yourself know, like you can give yourself more grace on, okay, cool, the trade is ready for me to go. So once I see back here, let me rewind it. So let's say you take one contract right here, right? As the next candlesticks continue to go bearish, or as you're starting to get confident in your trade, and you like, okay, Abe, I think it's gonna go. You can place another contract because now you're more confident in the actual move, and you can continue to hold the trade or add to your positions as you continue to hold it to wherever your TP target was at. And that's kind of like a good rule of thumb to practice as well when we talk about like, all right, risk management. How do I want to scale into a trade? How do I want to scale out of the trade? Getting in and getting out of it. So I just wanted to show y'all like real quick on how volatile the pair is. But let's actually get into the strategy that I use for scalping the markets. So for starters, and I'm gonna go back to NQ because that's my main pair that I trade. So for starters, I'm gonna come back to our 15. Really, none of this matters, but we're gonna get into that. So for starters, you need to add two moving averages to your charts, right? So a lot of people, if you're advanced, you're like, bro, moving averages, I don't use that. Trust me when I tell you these moving averages are milking the markets. I'm telling you, the moving, I'm telling you, moving averages, bro. You add these to your chart, sniper entry every time once I give you the time frames to go based off of. So we're trading NQ. I want you to come up here to the top of your screen. On Top Step X, actually, it should be the same thing. They literally have the same layout as TradingView. It's either going to be here or it's going to be like an indicator thing on the side. But you're going to click on indicators and you're going to type in moving average and you're going to click on the simple. Once you click on simple, you're going to get brought to this screen right here. And I want you to change your length to 4. Source is going to be closed. Offset is going to be 0. And so on and so on. And then you can choose whatever color line that you want to have. And my line is purple. Right? So go ahead, pause the video, do what you got to do. Mark up your chart the same way how I got mine. Next, after you add your 4, the 4 represents, right? The first line represents the market. It shows you the direction of the market. It shows you the direction of which way you want to trade it. So as you can see, when the market is going up, the purple line is going up. When the market is going down, the purple line is going down. Right? Simple as that. Now let's keep going. Next, you're going to come on the indicators and you're going to add a second line, right? And it's going to be another moving average simple. This second line, though, you're going to want to make 14. If I can click it, I will show you guys. Oh my goodness. Why is it not acting right? Thank you. So the second line, these are your parameters for the second line. 14, close, 0. I don't really care about nothing down here, but you can add all this if you want to. Actually, just focus on this and this, and it's going to do it automatically. Change your line. Make it whatever color you want. If you want your line thicker, you can come down here, pause. You can come down here and change it. If you want it thinner, like if you want a small line on your chart so it's not looking too cluttered, you can change it right here in this area, right? So the strategy is this simple. Whatever direction my purple line is going, when my yellow line crosses, that is the way you want to trade. I repeat, whatever direction my purple line is going, when my yellow line crosses, that is the way you want to trade. This is officially my Kobe strategy, one of my Kobe strategies that I first released to my academy members, right? Now this is on the 15-minute time frame. The time frame we can trade the strategy, work on whatever time frame that you want. It just requires a certain level of patience when you're looking to trade it. But for this video, we're focusing on scalping particularly. So we're going to be focused on trading on our 1-minute time frame or our 5-minute time frame. But my preference is the 1-minute time frame, right? So the main times that you're going to want to trade at NQ, I'm letting y'all know exactly the time frames that I trade. You can look to trade NQ around 6 a.m. Between 6 a.m. to 15, nah, 6 a.m. to 15, I'm tripping. Between 6 a.m. to 6:15 a.m. This is when NQ is moving strongly, right? The next push comes at 7 a.m. That's 7 a.m. to 7:15. These are areas where you're looking for your entry to hop in for like nice opportunity moves. After this, we have our typical opening bell push, which is going to be, it could either be 9:30, but I would like to say a more safer one would be 9:45 a.m., right? These are the time frames. These are like the prime time frames I want y'all to focus on when it's time to look to catch clean setups for NQ, for US30, both of them, honestly, but I'm talking about NQ right now specifically. After this, if you miss all of this time window, if you miss all of these time windows, there is still an opportunity to trade it around 11 a.m., and then there's also another opportunity to trade after the market is moving slow, which will be around 1 o'clock to 2 p.m., which is that second reversal that typically happens on the charts. So as you can see, it's really 1, 2, 3, 4, 5 opportunities to really go crazy on the charts. And this is me just focusing on New York session. If I wanted to add London session into this schedule, we can look for around, I would say 1:30 a.m. to 2 a.m. And then after that, another prime move will be 4 a.m. to 5 a.m. Right? So these are all the different times. But even though you got all these different opportunities, you're not going to need to trade all these different time opportunities. So this is London session time up here. I found my best success in New York because obviously I'm up trading. I'm actually paying attention. That's the style of how I trade. So this is London session time. This is New York session time window of setups that you can look for. But instead of me just talking about it, I really want to show y'all my actions behind it, right? So like, why do I think the way that I think? What is the reason? Why do Abe say 4 a.m., 6 a.m. is his prime time of entry? What does he see at that time? So let's go to Monday, right? So Monday on the charts, as you can see, the market was setting us up for a downtrend push. I believe I was bullish though for the most part because I understood that even though everybody was looking for sales, the market had room to go for the buys, right? So as we get closer to New York, the market sold all throughout London. What time is this? 5:30. It's getting closer to 5:50. It's getting closer to 5:55. I just want y'all to see something. Just want y'all to see. So this is 6 a.m. The 6 a.m. candlestick is right here. This bearish candlestick is 6 a.m. I'm on a 5-minute time frame. By 6:10, the market gave you a buy move, and it's already pushing up. But I want to drop down to the 1 minute just to show y'all how sniper the strategy is. So look, so you had a cross right here at 5:50. You had the market finally push. 6 a.m. started to sell off, but we are already bullish. We know our analysis for today. So if I'm bullish, I'm looking to take my buys off of that next buy cross around 6 a.m. Right? And I'm looking to hold this trade into open bell, right? Either opening bell or I guess I would say wherever my TP target is at. Now, this is where it get fun. Abe, how do you set your TPs? How do you know what you want to set your TP to? This is the beautiful combo that I have with my strategy. So first, the first strategy is the cross. The second strategy is using my Fibonacci. Fibonacci is a retracement tool that you can use to give you like a range of how far the market should be pulling back to before it continues for the trend. Some people already know about the Fibonacci strategy. Some people don't. For those that do know about it, forget anything that you know about it because my strategy, the way I teach it, is better. And yes, I'm being biased, but I'm only being biased because of how most people teach it. Well, I guess I haven't really paid attention to how anybody else teach it. So maybe some people do trade it how I trade it. Some people don't, right? The original strategy, like if you look on YouTube, for the most part, most people will tell you that, oh, Fibonacci always come back to the 50%. And then off of there, the 50% is your entry that you look for. But I learned, right, years ago, I've learned that the 50% is actually, since everybody is taught that the 50% is the area, you can't be surprised when the market movers or anybody, somebody else comes in and they cause the market to push to the 61 or push to the 78. And you may ask me, like, oh, hey, why would you say that the market's pushing up to the 61 to 78? Like, what's the reasoning behind that? Is because that is the area where everybody is setting their stop losses, right? Everybody is always entering at the 50%. They're taking sales here. They're entering at the 50%, and then their stop loss is either above this 78 structure or is right above this 61. And that's the reason why I made it my mission to always enter off of the 61 and always enter off of the 78 because I want to make sure that the market is really setting me up for the move that I want to look for, right? So my fault. I'm over here talking to y'all, but I want to make sure I'm still giving y'all, make sure y'all seeing what's happening over here in the charts. So let's say NQ, right? So with that analysis, what am I looking to TP at? I am looking to take profit at either my 61 structure or my 78 structure. Now, technically today is, since this is Monday, Mondays are usually typically days where we see the market go for bigger moves, bigger opportunities. So it's really a 200 point day or AKA a 2,000 pip day that I should be looking for on the charts. But regardless of the pip count, I want us to focus on literally setting my goal to hit TP just based off my fibs. I'm not going off of emotion. I really don't care about the profit. I care about following my fib goal. So yeah, the goal is to make 1,500 a day. But if I don't make it, okay, cool. Right? So this is 365 for TP1 at 61%. And then TP2 will be 78% at the 78% fib level, which will make me $530. Now, me personally, the way I trade, when I'm trading these Propfirm challenges, I don't trade with a 1 contract. I actually trade between a 2 to 5 contract. With NQ in particular, though, you don't want to trade with a 5 contract because you can if you're being sniper. And that's the reason why I learned to trade on a 1 minute, because I realized in the past my strategy works, but if I'm trading a 5 contract, the pullback that happens is enough for me to lose my account on a 50K account. So it's not worth me trading a full 5 contract. The only reason why I mentally started trading a 2 contract though is because y'all don't know this yet, but once you get your Express account, they put you on a what is it called? They put you on a like a profit target plan, which is kind of like, it's not, that's not the right term that they use. I can't think of it right now. But basically, once your account get over a certain balance, then you get access to trading up to 5 contracts, 10 contracts, 15 contracts, 20 contracts, right? So even though on the Express account you may be trading a 5 contract, when you, I mean, even on the, my fault, when you, even on the Combine or the Challenge account, you may be able to trade up to a 5 contract. But once you go to the Express account, they start you at a 2 contract. So I'm letting y'all know this now. So mentally, the psychology that you gonna go through when you're used to seeing $1,000 versus when you're only versus when you trade the Express account and you can only make half of that, that can be a reason why you blow an account. And I'm speaking from experience because I did blow an account. And I'm not scared to say that, right? Obviously, everybody blows an account, and you wouldn't want nobody to be a mentor if they haven't taken losses. Because if your mentor hasn't taken a loss, then how can he teach you how to control the psychology that goes behind taking that L, right? So the reason why I say a 2 contract is cool, because if you work on taking a 2 contract throughout your Express account, throughout your combine, and you're going to see this is more than enough. But if you focus on trading just a 2 contract, it's going to allow you to not be worrying about that when you get to the Express account, because you can only trade a 2 contract anyway for your first couple trades, regardless, right? And here, I'm going to show y'all, like, 2 contract is really all you need. So I'm going to go ahead and press buy on this. We're going to replay this back. And let's say I only want to go for the 61%. See? Now you're making $950 per trade. Or if it goes for my efficient move at 78%, now I'm making $1,250 per trade. And at first, $1,250 was my original goal that I was looking for on the charts, because I thought I couldn't make $1,500 a day, but then I learned like, oh, I can make $1,500. So that's the reason why I adjusted it for you guys to, like, the goal is $1,500 a day on the charts. But yeah, from a scalper standpoint, let me show y'all. So this is me entering out the 1 minute. And then what you're going to want to do, you're going to want to set a trailing. The moment your MAs cross again, I want you to get out of this trade, right? So right now I'm kind of showing y'all like what my real swing trades would look like if I held it to this. But regardless, I want y'all to focus on being disciplined with, okay, the cross happened, I'm going to take profit. And I'm going to show y'all what will happen if you don't take profit. And it crossed twice. So not once did it cross, but it crossed twice. So here, right, you caught your buy. It crossed, you should take out of the trade. It pushes up for the buy again. You wait. Cool. It recrosses again for the sell. This is an opportunity for you to look for the sells on the chart. But since this extension happened, all it really technically did was came back to retest the chart. But I want y'all to be disciplined with, if you're going to choose to scalp, I'm going to say that. If you're going to choose to scalp, and I guess in that same breath, if you want, you can go a higher risk since you're going to scalp. But if you're going to choose to scalp the markets, this is when it comes to understanding, like, okay, cool, let me take profit. Let me make sure I'm not about to get caught in a pullback. You need to become the pullback. That's why I taught my personal mentees. I was like, basically like, bro, we don't fear pullbacks anymore, because as we're on a 1 minute, we are the pullbacks. We see when the pullback is getting ready to come. We see when the market is hitting a resistance structure that might cause a pullback on the charts. So what we're going to do is we're going to take profit and we're going to execute. I'm either going to sell off of this, or I'm going to take profit on when I see the pullback coming, and then I'm going to re-enter the same trade again after the market is done pulling back. Once my MAs cross again on a 1 minute, I'm looking to take my buys, right? So I'm taking my buys. Technically, you would have took it off the momentum here. As you start to see this momentum happen, you would have took it off of this entry, preferably, compared to like entering right there. But as you can see, the market did indeed hit that 78, and look what happened. The market immediately pumped. So I'm gonna rewind it though, so I can show y'all like what it would realistically look like. This one of those days where like you literally have to be on the charts like as it's doing it, so you can see it. Because like if I was on the chart, the moment I see this momentum push, I'm probably entering around 21,977-ish. So even though still we buy, now we're looking for the continuation back up to the 78 like I just talked about. And clear as day, we saw exactly why we respect our fib levels, right? Because the market pushed up to the 78 and then it immediately sold off. Once you get your cross, you can take your sales, and then it's kind of like that same cycle that goes on and on over again, right? I'm taking it back down to the structure. I'm moving my stop loss and profit. If my MA is crossed, I look for the buys. If not, I'm holding. It crosses again. Now you look for the buys. So it's like it's literally a complete cycle. But as you can see, I think what trade? How many trades I took? 2 trades. Took 2 trades, and I'm already up $1,000 on the charts, right? And that's fire, and that's just off of scalping. And then you still got you another play, and I haven't even showed y'all. Look what time it is. This is still only 7 a.m. This is still only 7:16. This isn't even New York session yet. New York didn't even opening bill didn't even happen yet, right? So before opening bill even happened, you're already up $1,000 on the day. And then the same thing here. I guess I could have said too, like As you're selling, you got to retest back to that candlestick that took off for the buys. The moment it crosses again, my fault, I don't know why I just did that. The moment it crosses again, what are we doing? I just told y'all, right? We're buying. And you're going to look to take that same trade, probably back to the previous high, or all the way up in this structure. But since it's Monday, we don't have our levels yet on the fibs. So I can understand why somebody was like, oh, I'm not going to take it right there. But yeah, I'm going to wait. But off rip, I'm going to let this one hit. So off rip, first of all, this is how quick on the scalping mode of how fast you can smack your take profit goal. Obviously, this is 1850. So we wouldn't have set it to 1850. We would have made sure it was enough to just be 1500, and then we would have ended the day based off of that. But that is literally, and this is still not even opening bell yet. And this is like a perfect example of how you can scalp the charts on US 30. I mean, not US 30, on NAS 100, aka NQ, or same concept on US 30 as well. And as you start to trade the pair more, depending on if you're a beginner or if you're new, actually both of y'all, beginner and advanced people that's watching this, start to back test. Start to really spend some time on the charts and really start understanding the patterns. Because you'll start to understand how NQ works. You'll start to know when it's just pulling back, or when you can anticipate a retest, or when you can anticipate a breakout. For me, when I trade with my strategy, with the 1 minute strategy, how my strategy usually works, I always take the first MA cross, right? But that's my personal preference. The higher probability setup will be taking the second cross. And the second cross is because I take my first cross, and then there's typically a retest back to the cross before the actual continuation of the move. So something like, let me say right here, for example, I would take this buy here, boom. The market comes back to retest, same entry level, then it crosses again. And as you can see, the second time it crossed, what happened? It took off for a nice move. It retested one last time, one more time, but then it really took off for the main move, right? And then if you want to set your stop loss will just be under the previous support structure or the previous zone, right? Either, say it again, stop loss will either be under the previous support structure or the previous zone. Let's see if I can find like an example of that. Let's see. So let's say we enter like right here. Actually, we did. That's funny. So when I enter this buy right here, my stop loss would be under here, right? So this is like my mental stop loss. Now, if I rewind this back, I want to show y'all something. So my mental stop loss, I'm gonna run play on this, and this is why risk management is important and why you want to pay attention. So let's say I buy here. Let me show you how steep of a stop loss this will be. So this is a 740 stop loss, right? I'm not worried about the loss. I'm only focused on my TP because that's how much I trust in my strategy. Now the goal isn't 790 here, or the goal isn't, well, at this point I was already at 1300, so I would have only needed $200. So maybe my stop loss probably would have been a little tighter. But my rule of thumb is typically I always have a mental stop loss, or I'm setting the stop loss right under the previous higher low structure if I'm bullish. Like if I catch a nice buy, if I catch a reversal entry like this, cool. My stop loss can be right under this candlestick or right under the previous higher low. If I was in a sell, let me take profit. If I was in a sell, let's rewind actually over here because I only enter off of lower highs. So let's say I enter off of my MA cross over here. I'm gonna wait for it to cross. All right, I enter there. My mental stop loss, or AKA my stop loss, will be right above this previous lower high structure, right? Or it might, depend on the momentum, it might be a little bit higher. But the moment I go into profit, my stop loss isn't staying there. My stop loss, I'm setting my trailing, and I'm getting out of the trade. And yes, I got wicked out. I wouldn't be mad, right? It really just depends on like what I'm looking for. And for this day in particular, this was later in the London session. I'm already bullish going into New York. So I know I'm not really looking for sales. So sales for me is just an opportunity for me to scout the market. I'm not looking for nothing too crazy over here on the charts. I'm going to let this play a little bit, and I want to give y'all another example. Like, I'm not going to make this video too long. I told y'all I was going to start getting straight to the point with it, just so y'all can, like, we're not fluffing nothing. All right, let's go all the way to Tuesday. I'm going to let Monday play out so we can see the market structure, and then we're going to get to it. All right, what we got going on? So it took off for crazy buys. Of course it did. We got us a nice sell-off pullback. Is it going to continue for the downtrend? All right, we got us a beautiful retest. Now, this is what I love, bro. I love the grind. I love the hustle, man. Crap, went too far. That was an accident. And out of my, I messed my thing up. Dang. All right, come on, hurry up, so I can get my sauce out. And the main reason why I gave y'all those times too is because I don't want y'all worrying about the market when it's choppiness. I prefer y'all to have a fire entry when the market isn't choppy at all. That's why I gave y'all like prime times when I enter, because I don't care about news. I don't gotta worry about none of that. If I do trade during news, like trading during opening bell for real, then so be it. But I don't have to. You feel me? It's not necessary for me on the charts. So I'm gonna scroll over here. What day is this? This is Thursday, which is actually hilarious because Thursday was what? Oh no, this I'm over here thinking it's Juneteenth. I forgot this. I thought I was doing it for this week, but it's last week. So all right, so this is the 12th, right? So as you can see here, this is where we're at 6 a.m. 6:15. The market is kind of like consolidating, so I see I guess it would be an opportunity to scalp here, but it depends on what I'm looking for at the time I wake up. So if it's 6 a.m. in the morning, let me see. I don't know why I just did that. So if it's 6 a.m. in the morning, what am I seeing? So this is Sunday support, Friday, Sunday support. Came here on Monday, came here on Tuesday. So, okay, for me, I'm looking at this like, okay, cool. I'm on a support structure. I'm on a main key structure. I know that during New York today, I am bullish because it's all the way Thursday at the end of the week. The market, there's no reason the market should be really breaking out of this. It should be respecting this support and giving me a buy retest back to this lower high right here. And this is with me just understanding the markets because of how much time I spent in it. And right now I know I am on US 30, so I'm going to slide over to NQ, and it still should be the same exact setup over here. Let's see. I'm glad I caught that before I really got into it. So same as that setup over here, right? So here go to support. Same support structure, same wick entry. Over here, honestly, what I would look for, looking at this, I would be looking for a, dang it, it's all the way up here. But it did exactly what I thought it was gonna do. I was about to say, I would be looking for like a sell push back down to the downside first, and then I would look for a continuation. But with that analysis, right? So let's see, this was the market at 6 a.m. Let me show y'all something. Let me show y'all this, the fib action. Boom. So everyone, this, right? So off rip, I see at London, opening bell London session, we had a beautiful sell-off, right? After this sell-off, the market started to go back for those buys. By the time I'm waking up at 6 a.m., I'm noticing the market is starting to sell off. Let me drag my fibs from top to bottom, right? Let me drag my fibs from top to bottom. And you know what I'm going to do? For those that don't know nothing about the Fibonacci, I'm going to add a Fibonacci training video in here for you as well. Because I just realized I am over here just going over the strategy without even showing you how to place it or anything like that. I'm so sorry. I am very so sorry about that now that I think about it. So I might actually make a separate video just for the Fibonacci. But this is like really just advanced strategies that I'm giving out right now. It's my fault. Bear with me. I got y'all. So look, so fib placements, I always place it from wherever the high was from London to wherever the low is at the time. And vice versa, wherever the low was from London to the current high at the time. So we got our highest point. We have our lowest point. Obviously, we are in a downtrend market. So I'm drawing my fibs based off of that. It gave us an extension to our 78. And now we're seeing the market close back inside this zone. 6 a.m. comes. I'm either looking for the sales off my 5-minute time frame or I'm waiting for the 1 minute to give me an entry that I need to see. So as I can see here, the next setup over here will be buys because obviously, as you can see, the cross was setting up. And then I would look to sell off of my next 1 minute sell cross. And then where am I looking to take profit? All the way back down to the previous stretcher. Now, for me, this is 1950, right? So, and then same thing, my fault. Stop loss will be either right above here or above here. But stop loss, let's say it was here. It's over here moving so fast and I can talk. So stop loss is right there. $900, cool, whatever. Take profit would be 1840, but technically it wouldn't be 1840 because I'm focusing right now. We only focusing on passing the challenge. So all you would need to pass the challenge is 1500. And as you can see here, technically the market already hit 1500. I'm gonna see if it came back or not, and then I'm gonna go ahead and move this stop loss and profit. Let's see if it go ahead and push down again for me real quick. But yeah, technically you would have already been out of this trade because it has smacked the TP right here at 1500. Right now I recrossed, so this would have been a buy setup that we would have taken back to this entry. But this is perfect though, because imagine somebody didn't catch this opportunity. If you missed the 6 o'clock window, we're back at that same lower high structure. The next time the 1 minute cross, you can look to take the sales. Boom, you're back in the sales. Stop loss can be right above this. It's crazy because the stop loss had to be steeper this time. It would have to be a little bit steeper, but it's still right at that lower high structure. If it recross, take profit, you get out. If it holds, you hold. That should be the last time it's retesting. So we're gonna move our trailing in profit. And this is exactly what I do. I'm showing y'all. This is exactly what would be my thought process. And then, did I set my TP this time? No, I did not, because I suck. Alright, so boom. Just like that. Trade number 1. Boom, that would have had you right. But let's say you missed that entry. The market gave you another opportunity to come back around 7 a.m. And they gave you the same setup. So just like that, I'm really showing y'all what it's going to look like on the other side. So I'm going to stop this here. Then I'm going to come over here and talk to y'all on the actual computer. All right, so I just really showed y'all, like, that was just like 2 quick examples, but it's so simple to catch $1,500 off of NQ. You just have to be disciplined. And my preferred entries are with my Fibonacci. Like, if you can help it, I would love to catch entries only with my fibs. So fib entry out to 61 to 78 with the MA cross, that's a fire A+ setup for me to take. And as you can see, what happens when we take those setups, in particular, the market plays out and respects those levels to a T. Now, I just showed y'all like how volatile the market is moving, how simple it is to catch 1,500 pips. But at the same time, this is when you're in the trend. If you're still learning or if you're not new to this, the same way you can make that is the same way that you can lose it, right? So it's up to you to remain disciplined. And if you feel like you're not going to be as disciplined, or if you don't trust yourself yet to be as disciplined, that is when you want to drop down to that micro MNQ, like the micro NASDAQ, to make sure like you understand the strategy first before you go full-fledged into the NQ and off-right, hit those 2 contracts on it. Now, would I prefer that y'all do that? Yes, if you're going to be disciplined and follow my rules. But if you know you're not, if you know you can't do that or whatever, for whatever reason, you know yourself, don't do it. Be disciplined, trade MNQ, and just focus on that. But the fire thing about the scalper strategy is, imagine what y'all gonna do when you get past the express account. So for those that don't know, this is just the combine. You can only make $1,500 a day. Once you pass the combine, you can hold these trades longer. You can hold it, instead of trying to go for $1,500, you can make $2,000 a day, $2,500 a day. Now, do I recommend it? It depends on how advanced you are. Like, if you're experienced, if this is your first time trying to get a payout and do things the correct way, I challenge you to be disciplined. I challenge you to follow your rules. The same, don't switch nothing up. The same way you use what you used to go for the past challenge, that's the same thing I want you to do when you go take the express. So no more than 1,500 a day. Always respecting your fibs, hitting the 61, hitting the 78, just setting your TPs there every single day. Because what you're doing is, now you're compounding your $1,500 days. And that's going to build the discipline that's going to make you stay disciplined within taking profit, within holding the trade. Now, I did just show y'all, I just realized I kind of showed y'all my main strategy, but I didn't at the same time, because the 1 minute is really used for scalping, but it's also used for my main strategy when it comes down to catching the sniperist entry that I can catch on my position for my main move. So this was just a scalper version of it with the 1 minute time frame. The next video I'm gonna go over, like, we're gonna focus on the 5 minute and the 15, and that's gonna get into like how I can see it really clearer than what I already see in a 1 minute, with bullish engulfing candlesticks, with bullish momentum candlesticks, and then bearish engulfing candlesticks, bearish momentum candlesticks, that's letting me know that the market is setting me up for the move that it's setting me up for. So I'll catch y'all over in the next video, where we're gonna be focusing on my main strategy. And actually, y'all can use this for funded and personal too, because I'm gonna teach y'all how to do it for like potentially swing trade opportunities as well. Because why not? Why not? All right, I'll catch y'all in the next one.